Please don't scroll. This one skill will save your account if you trade forex, crypto, and stock online. Listen up because most traders never learn this and it costs them everything. But what if I told you that learning how to lose correctly is the only way to become consistently profitable? However, in this video, I will teach you how to take a loss while trading and how and where to put or set your stop loss like the pro traders. But before I do that, let's dive deep about how to take a loss. Smash the subscribe button and hit the like button if you've ever lost money trading forex or crypto, and comment loss if you are ready to master it. And don't forget, it's day 20 of the BJW bootcamp, so stick around. Now let's talk about first step on how to take losses. However, step 3 and step 4 is the major reason you want to watch this video to the end. Step 1. A truth many traders ignore. Every trader wants big wins, but what separates 10% profitable traders from 90% losing traders is not strategy, it is loss management. And loss management is not risk management. However, risk management is how much can I afford to lose before even entering a particular trade. Why? Loss management is how you actually handle a trade after it starts going against you. That is loss management. I just hope you all understand. Why step 2, why taking loss is a skill. A loss is not a failure, it is data. And data intends that it tells you something about your edge, your strategy, and your timing. And the key point here is stop loss protects your capital. The market does not care about your emotions. If a trade hits your stop loss, that is a good trader's trade. And traders who remove ego from losses survive longer. However, every loss you take right helps you maximize your next profit. Step 3. Common mistakes traders make. This is going to be the top mistakes traders make when dealing with losing trades. Letting hope override risk rules. And this happens when you ignore your rules, your risk rules, because as a good trader, we usually have predefined rules for each trade, which is how much money you're willing to risk, where your stop loss is set, and when to exit a trade if it goes wrong. But you choose to ignore it all, forgetting that hope is not a strategy. You must always apply risk rules to protect your capital. 2 is moving stop loss further away is another common trading mistake that ties directly into emotion and poor loss management. So you want to know that a stop loss is a preset level where you exit a trade to limit your losses. However, moving it further away means the trade is losing money. Instead of accepting the loss at your original stop order, you manually adjust it further from your entering, hoping the market will turn back to your favor. And if you do this, essentially you're ignoring your rules and increasing your risk because of hope and fear. However, once your stop is set, never move it further away. If the trade goes against you, take the loss, analyze again, and move on. Not admitting when the market has changed. Markets are constantly evolving. Trends, volatility, and momentum can shift at any moment, and not admitting happens when you enter a buy trade based on your strategy that used to work. However, the market shifts from, let's say, a buy to sell, but you stick to your original buy, refusing to accept that your trade setup is no longer valid. Basically, you're fighting the market, more or less, counter trading, which can lead to a lot of more losses. However, you want to know that the market does not care about your plan or your opinion. So you must accept when conditions changes and adjust your trading accordingly. Revenge trading. This happens when trader tries to win back money they have just lost instead of following their plan, which gonna cost you more loss. However, never try to trade to get back lost money. Take the loss, take a pause, analyze again, and trade your plan. If you're actually enjoying the step-by-step guide I'm walking you through on how to take losses, then you want to pay close attention to the main heartbeat of this video, which is step 4 on how to take losses like pro. Like I said, this is the heartbeat of this video. If you want to be a professional trader, you must master losing. Profit is just the reward you get when you consistently manage loss first. And to take loss like a pro, one, you must set your stop before entering a trade. Two, when stop hits, which is when your stop loss hits, accept it and do what? Stop trading. Analyze, don't emotionalize, because emotion clouds judgment, which leads to bigger losses, and analysis builds skills, and every loss becomes a learning opportunity. However, adjust your plan but don't chase trades, which means after a loss, it is normal to review your strategy and then make improvements. But there is a big difference between adjusting plan and chasing trades. And adjusting your plan is analyzing what went wrong, updating your strategy for future trades, while chasing trade is impulsively entering a new trade immediately to recover a loss. You want to know that losses are feedback, not punishment. Use them to refine your rules and what strategy. Always wait for clear setup. Never trade out of frustration and urgency, guys. Because discipline plus reflection is equal to long-term success. Chasing trades will get your account wiped. However, losses are not just losses, they are learning opportunity. So guys, now you've known this first step on how to take losses. Let's go to the chart and let me show you how to put or set stop loss like a pro, and what pips or the best pips you must use depend on your trading style or what trader you are. Maybe you're a scalper, or maybe a day trader, which is same as an intra trader, or a swing trader, or a position trader. I'm going to show you how to put or set your stop loss, and the reason is because it will help you to still stay in a drawdown without without your trades taking you out before making the move, or without you losing unnecessarily before the market making the major move. And all you want to do is to still keep watching this video, and don't forget to comment in the comment section loss, and like this video if you've lost money while trading. So guys, right here on trading view, so as you can see, these are the pairs I trade. I only trade the commodity pairs like that of gold and silver. Most especially I trade gold, so I'm going to be using gold as an example in this particular video to illustrate to you how to set the best stop loss for your trades, right? And you can go ahead and refine this and then do better with it, right? So I'm going to click on one of these right here, and then I'm going to go ahead and allow this to load up. But before I wait for this to load up, if you come right here on my Telegram channel where I journal trades, right? So if you're not yet on the BGW trades journal, the second link or the first link in this video description gonna be the link to this particular channel. And the reason for this channel is not for maybe chasing clout. The reason is for me entering the trades or sending the trades as journaling on this particular group. And the reason why I'm journaling my trade is for me to keep track every weekend to see if I'm profitable or not. and that is why I created this group, and it has benefited a lot of people. And what you want to do to just maybe take the trades I take or journal the trades I take is just for you to join this group just by clicking the link in the description section. And today, as at the time I'm recording this video, is 21st February 2026, and it's Saturday. So I even sent a message to the group. I said, so far this week, XAUUSD, we had 6 buy trades and 4 take profits with 2 stop loss. And then we had 2 sell trades on XAUSD, and on the both sell trades we hit stop loss. And so far last week, from 16th February to 20th February, which was yesterday on Friday, we had over 8 trades taken this week, and only 4 take profits we had, and also had stop loss of 4, which is not profitable, but we broke even, right? And even though I later posted and said I took a lot of trade this week, I guess I was chasing the market, trying to master myself more and refine. We go again next week. And if you are so come on this group, you can go ahead and see the trades we took. I'm not going to be showing you anything about this group, so if you want to get some more information about this particular journal channel, it's called a journal channel, you can just join the channel and scan through and see what we will be doing to as well confirm with yourself that what I'm actually teaching, I'm practicing it. So right here on XAUSD, so you see right now, I'm going to be going ahead and backtest backward the trades I've taken, and then show you how I took the stop loss and how you can also take the stop loss, and tell you the pips you can use if, let's say, you are a scalper or a day trader or even a swing trader or a position trader. That way you know how many pips am I to lose if I'm taking a particular stop loss or if I'm putting a particular stop loss. Right, so we all know that on this channel I trade price action. We wait for what? A sweep of the previous low, a first break of structure, liquidity, and then our POI. Then we enter the trade. And then for you to be profitable, you must make the higher time frame your best friend, right? Whatever the higher time frame is telling you should as well align or should correlate with what you're trying to do with the lower time frame, like that of the 5 minutes, like that of the 1 minute, 15 minutes, 30 minutes. So if the higher time frame is telling you buy, so all you should be doing should be looking for a buy setup using the lower time frame. And if the higher time frame is telling you sell, then you want to look for what? Sell setup using the lower time frame. And trust me, using this, using your strategy, using what I've told you on how to take losses, trust me, you will be 99% ahead of most traders. So let's come right here how we can set stop loss, and then the best pips to use depend on the trader you are. Now looking right here, I caught 3 trades right here on XAUSD, and they are all buy. So if you come closely right here, and as you can see, now let's see the first one. So the first one, you saw that I saw this sweep right here. Let me get this pouch, right? I saw this sweep like this, sweep of this, and what happened? I saw the break of structure, right? So what I waited for was, immediately I saw the sweep, I saw it was a type 1, because I told you guys that if you come right here, let's say, let me get this pouch again. If you see something like this, let's say you see a sweep of the previous low and a break of structure, there's every tendency that price will come back into your sweep and then continue the trend, right? Cool. So what I did was I entered from the sweep, right? I entered from the sweep, and then my stop loss was right here at the last low, which is tend to be my what? My protected low. And if you watch carefully, and you can see that immediately I saw the sweep of the previous low, then I entered at the sweep. Now what was my stop loss, right? My stop loss was around 14 pips, which is to say I'm a day trader, right? And if you watch right here, to actually be sure about what stop loss to use, then you want to make sure you use the measure, then just mark it out, and then boom, you can see 14 pips. Cool. That is how you know your pips you're using, right? So now you marked out, you have 14 pips. It's actually a good piece. Now if this trade starts coming down from this zone to this point, then I'm pretty sure that this trade is invalid. So if this trade come back to this zone, then I'm sure that there's every possibility that I'm gonna lose the trade. But now there's one simple thing you want to do. Now let's say now we are covering this low, right? We are covering this low, right? This is the low we are expect to cover, right? Let me delete all this. So this is the low we expect to cover, this red bar. So all you want to do is to add an extra pips. Now an extra pips is for you to add an extra bar to where your last low is, and the reason for this is it will help you. Let's say this price want to maybe tap at the exact double bottom of your last low, then if your stop loss is at the exact low of your last low, then you will lose the trade. But if you leave an extra pips, like let's say 3 or 2 pips away from your stop loss, you add it from where your stop loss is, then it protects your account and then see you to the top, right? But if you put it exactly at where this is, there's every possibility that if this should come on a very serious drawdown, it might just tap into this low, tap into it before going, not even take it out, maybe giving it a double bottom before going. So to avoid that, just add an extra pips. That will make it maybe 14 or so, like I said right there. And if you should do this, and as a scalper and as a day trader, trust me, your entry will be swift. And if you watch this, basically you can see that it didn't even come close a bit to tell that this setup was so swift. It tapped into it and went to TP. However, I also saw something close again. I saw another setup. I saw another sweep of the previous low, a breakout structure. I saw another one called another liquidity. So this was liquidity, and what happened? It tapped into the liquidity, and what was my TP? It went into the TP, and immediately it went into my TP. What happened? It went back and respected this my POI, because at first price did not tap into my POI. It just tapped into liquidity, which was where I entered the market and went to my TP, but it didn't come to my POI. But when price take out my TP, it went straight to my POI and then have that major buy. Does that make sense? Now let's talk about stop loss for this. Now if you watch right here, your stop loss should always cover your lower low and leave a bit 2 or 3 pips gap. Now what does that mean? Let's say this is your stop loss. For instance, let me say this is your stop loss, right? You don't leave your stop loss this way, right? Now all you want to do is to just give an extra gap to it, to save your trade, because of the what if there's a more drawdown and the thing went to maybe a double bottom, then you should not lose it just because of one single pips. And I know countless times I've lost a trade because I refuse to add an extra pips from my stop loss. So adding a little extra pips can help you retain your trade for not hitting your stop loss. And if it hits your stop loss, then all you want to do is not to see it as punishment, but see it as opportunity to refine, study again, and then understand why did it hit stop loss, guys. And this is how you tend to learn. And like I said, if you have a one stop loss, just stop for that day and don't trade, because you trying to trade again is you trying to revenge trade, is you trying to win the loss you lost. And then you trying to do that, you're going to be trying to mess things up. And if you don't want to mess things up, all you want to do is for you to pause, stop, take a break, and then refine and reanalyze and follow your trading plan. So that is how this works. And you saw what happened, this play out and went to TP. So let's talk about average pips you can use depend on the kind of trader you are. Now, if you're a scalper, you should be looking out using 5 to 15 pips. And the reason you're using these pips is if you use 5 to 15 pips, it's smaller, and because you want to chase smaller wins, right? And as a day trader, which is also an intra trader, you're looking at risking averagely 15 to 50 pips. So as a day trader, 50 pips should be a max pips you should use as a stop loss, right? And as a swing trader who will trade for like 1 to 5 days and trade for 4 hours, then you should be looking from 50 pips to 150 pips, right? And then as a position trader, you should be looking at holding 100 pips to 500 pips, right? Now, this is just my speculation. It's not, let's say, is a must that if it's not 500 pips or if it's not like this, you should not trade. So this is me telling you that to minimize your stop loss, you should not go beyond this particular pips. And I'm talking about pips. If you don't know how to calculate pips, and you want the separate videos on how to calculate pips, then you want to go ahead and a comment in this video right there. So looking right here, if you watched recently, today's weekend, I've made some analysis, I've refined, I've go through the chart, I've back test few of my trade which I had stop loss on, and then I had a buy limit, which is I'm anticipating that next week XAUSD will see a huge buy. However, I had a buy order. Now, if you watch from where I set my buy order and where my stop loss is, now let's see how many pips is, because I'm a day trader and sometimes I swing trade, right? And sometimes I scalp. But looking like this is what I'm seeing from Monday on XAUSD. So I'm going to get my long position and then put it from where my POI is into this zone. Boom. And what happened? That is it. So which is to say, this is what I'm looking at. So, and like I said, you add a bit pips to it. Boom. Now this is very perfect. And if you will look at this is 17 pips from one, which is giving me a 1 risk is to 3 reward ratio right there. This is 1:3 arrow. If you as well sticking to risk to reward, this is a perfect 1:3. And what am I expecting? Whenever price come back into the zone, which is my sweep, then I will expect a buy, continuation buy from gold. With that said, that's gonna be it right here. And guys, if you want me to make a video about risk management, what's risk management, I'm talking about lot size, I'm talking about your trading plan and all, you want to go ahead and comment risk management in the comment section. And like I said, if you've ever lost money, you want to do well to hit that like button and you will never lose money again while trading. And if you don't hit the like button, you will continue losing money as a forex trader. So with that being said, until I see you on my next video, stay safe and peace out.